Joining us now in a CNBC exclusive is Charles Schwab CEO, Walt Bettinger. Walt, welcome back. Good to see you.
Hi, Sarah. It's good to see you. Thanks for inviting me to be with you today.
Of course. So clearly a huge move in the stock, up more than 12%. What are you hearing from investors as far as what sort of signal of relief you gave them?
Well, I don't know that there was a big signal of relief. I think that in more challenging times like last spring, it's important for people to focus on the trees, but at this point, I think people are beginning to focus on the forest and the recognition that Schwab's consistent long-term organic growth is still in play, and our integration efforts with Ameritrade are also going very well.
But you know, going in, there was all this consternation about the cash sorting, which basically, and we've talked about this before, Walt, is the money moving, client money moving into lower margin business for you as clients want to chase higher rates. Is that trailing off? What's happening there?
Well, it is, and I think it's important to put this in context. We encourage our clients to move money out of lower yielding brokerage sweep accounts that are really akin to checking accounts. They have bill pay services, FDIC insurance, and when rates begin to move, we encourage our clients to take the part of those balances that are long-term cash and put them in something that yields more interest for them. That's good for the client. That's what a client-driven organization does. We know that there's a financial impact to us in the short run of taking that action, but because we don't manage the company on a quarterly basis, we're always going to do what's right by our clients. And eventually when you do that, that trust is rewarded, that loyalty is rewarded, and those clients stay with us and grow their assets with us. And I think you can see that in the results we presented today, and I'm pretty confident you'll see that as we go forward.
But what more can you tell us about the deceleration that you've seen in that cash sorting in June and whether that's continuing into July?
Well, it is. When we look at the last couple of months, the client cash realigning is down over 80% from what it was in the first quarter of this year. And again, not surprising, because we were proactive going to clients, encouraging them to move their sweep cash into higher yielding balances. And that process began 15 or 16 months ago. They've largely done that. And when I look at June, what's interesting about June is that even as this cash realigning fell to the lowest level it's been in many, many months, part of that was because clients are now moving back into the equity markets. So that's a good thing. It's not simply clients moving money into something in cash that pays higher yields. They're back in the markets. And we saw in the aggregate for the second quarter, buys were about 20% higher than sells. So our clients are showing some optimism. They've actually moved above the line in terms of their optimism about being a good time to invest, and that's reflected in their actions.
That's interesting color. But just on the deceleration, so is there a potential, Walt, to restart buybacks here? Because you paused them last quarter because some of the impact and the higher short-term borrowing that was coming as a result. How are you thinking about that decision?
I still believe in an environment like this that we focused on continuing to build capital. And we're aware that there's possible changes coming from our regulators around capital requirements. So we're going to remain conservative and continue to hoard capital at this point in time rather than going into a buyback period.